Good afternoon, everyone. My name is Preet Bharara, and I'm the U.S. Attorney for the Southern District of New York. Based on years of alleged fraudulent lending practices, today we announce a lawsuit against a company that has billed itself as the largest privately held mortgage broker in the country, Allied Home Mortgage Capital Corporation. We have also sued its underwriting arm, its president and CEO, Jim Hodge, and its executive vice president and director of compliance, Jeannie Stell. As described in the 41-page complaint, Allied was a massive engine of mortgage fraud, controlled and disguised by CEO Jim Hodge and others who used lies, false documents, and corporate manipulation to play a shell game with HUD. The victim of this shell game was not only HUD, who has so far had to pony up $834 million and counting for insurance on fraudulently issued mortgages and other costs. It was also the American taxpayer whose money was taken to fatten the wallet of Allied and Jim Hodge. Having insurance stand behind a mortgage program was supposed to help creditworthy low and moderate income families achieve the dream of home ownership. It was not a license for putting revenue before responsibility. But as set forth in the complaint, Allied and its CEO exploited a government insurance program to engage in a wholesale shifting of risk away from itself, playing a lending industry equivalent of heads I win and tails you lose. The losers here, as I've said, were American taxpayers and the thousands of families who faced foreclosure because they could not ultimately fulfill their obligations on mortgages that were doomed to fail. Allied's decade of concealed misconduct, as alleged in the complaint, has resulted in tens of thousands of defaulted loans, thousands of American families facing eviction, and hundreds of millions of dollars of losses to the United States. Again and again, Allied allegedly told regulators that whatever problems they found were isolated and had been corrected. As a result, Allied continued its business as usual. Today, Allied's business as usual comes to an end. Before I go any further and talk about some of the details in the complaint, I want to introduce and thank our partners here today. First, Helen Konofsky, HUD General Counsel; Stephen Perez, Assistant Special Agent in charge for the New York region of HUD's Office of Inspector General; and Case Agent Jennifer Lake. I also want to thank the Office of Inspector General at the Federal Housing Finance Agency. I'm also joined by members of my Office's Civil Fraud Unit, which oversees civil fraud investigations, including mortgage fraud investigations like this one, and which is handling the suit. Assistant United States Attorney Jamie Nawade, along with Chief of Civil Fraud Unit Heidi Wendell, Deputy Chief Pierre Armand, and paralegals David Farber and Callan Smith. And I want to especially acknowledge the work of Andrew Schilling, the Chief of our Civil Division, who has overseen the work of this remarkable unit for some time now. The reason, by the way, we established the Civil Fraud Unit last year was to bring renewed focus, energy, and resources to combating financial fraud, and this is precisely the kind of case we had in mind. Just 6 months ago, we brought another suit, which is still pending, against Deutsche Bank based on its lending and underwriting policies, and we fully expect to be bringing more cases of this kind in the future. Now let me just spend a couple of minutes describing some of the allegations in the complaint. In order to understand the nature and significance of the allegations, it's important to understand the Loan Correspondent Program run by HUD, which includes the Federal Housing Administration, or FHA. In a nutshell, here's how it worked. FHA mortgage insurance makes homeownership possible for millions of American families by protecting lenders against defaults on mortgages. FHA insurance encourages lenders to make loans to creditworthy borrowers who might not otherwise be able to meet conventional underwriting requirements. To assess the risk of default on the loans it insures, however, HUD relies, as it must, on assurances by approved FHA lenders that they comply with basic HUD requirements, As an approved FHA loan correspondent, Allied had the authority to originate loans that would be backed by FHA insurance. In other words, backed by the full faith and credit of the United States government. But as part of the bargain, Allied was required to seek HUD approval for each branch office that originated FHA loans, and in seeking that approval, Allied was required to submit a certification about its operations at that branch. And to maintain that approval, Allied was also required to certify each year that it met certain quality control standards and was in good standing in each of the states in which it operated. But as today's lawsuit alleges, Allied never played by the rules. Instead, it brushed aside the most basic of HUD requirements for lenders. As alleged, Allied's CEO, Jim Hodge, created a culture of corruption which led to a collapse of lending standards and a pattern of deceiving regulators about Allied's actual business operations. Its wide-ranging deception is well documented in the complaint, which I urge you to read in its entirety. Among other things, Allied failed to disclose that it was operating scores of unapproved shadow branches that were originating mortgages, failed to disclose that it employed convicted felons and then lied about that fact, failed to disclose that it had been repeatedly sanctioned by regulators in Rhode Island, South Carolina, Arizona, and Washington State, among others, failed to disclose its true default rates to HUD, failed to heed serious concerns voiced by lower-level employees, and utterly failed to maintain an adequate quality control program given the volume of loans it was issuing. In fact, further to that point, the complaint alleges that Allied failed to conduct on-site audits of its branches as required, failed to review 10% of all closed loan files as required, and failed to conduct reviews of early defaults as required. At one point, even with more than 500 branches operating nationwide, Allied had only three quality control employees in its corporate office. And at some point, in an apparent tax-motivated move, Allied transferred its quality control office offshore to the island of St. Croix, where it employed a number of people who were so unqualified for the job that some did not know, for example, what a mortgage was. If these allegations are proved, it will mean that Allied's supposed quality control program was nothing more than a joke. In short, this deceptive behavior allowed Allied continued access to the government-insured mortgage market and led the government to foot the bill for thousands of mortgages that were doomed to fail. And as I have said, the government is out already $834 million and counting. Today's action is a civil lawsuit, but the investigation is continuing, and we will go wherever the facts lead, as we do in every case. As you know, the FHA is a vital program that allows millions of Americans to purchase homes. The FHA is the largest insurer of mortgages in the world, and its market share is only increasing. Today, the FHA insures 1 of every 3 new residential mortgages in America. That's up from just 4 or 5% of every 100 only a few years ago. And that means that FHA is becoming a more and more important pillar of the entire housing market. And that, in turn, means that the type of deceptive conduct described in today's lawsuit simply cannot be tolerated. Now, let me just end by reading an email that is quoted in today's complaint. It was sent by defendant Jeannie Stell to another Allied employee in 2009 after HUD issued a negative audit report about a number of Allied branches. Jeannie Stell, referring to CEO and defendant Jim Hodge, Director of Compliance, Jeannie Stell wrote this, quote, Jim has to be the biggest target personally for his disregard of the regulations. Serves him right, never listening and thinking he didn't have to play by the rules. I could not have said that better myself. Now it's my pleasure to call to the podium Helen Konofsky, General Counsel of HUD.
Good afternoon. Thanks, Preet, and thank you for all the members of your staff and everything that they have done in this lawsuit. It's a wonderful opportunity for me to be able to stand with you today to announce the initiation of the government's civil fraud case against Allied Home Mortgage Corporation and Allied's President and CEO, Jim Hodge, and its Executive Vice President, Jeannie Stell. Approximately 18 months ago, I, along with Attorney General Holder, had the honor of announcing the creation of the government's Interagency Financial Fraud Enforcement Task Force, Mortgage Fraud Working Group. President Obama, by executive order, established the Interagency Financial Fraud Enforcement Task Force in order to facilitate, encourage, and build cases like the one we announced today. HUD was selected to serve as a member of the task force, along with its Mortgage Fraud Working Group, a group that aligns the knowledge and skills of the nation's U.S. attorneys, the Justice Department's Civil and Criminal Divisions, HUD's Office of Inspector General, and other agencies to combat fraud and abuse in the mortgage industry. As a result of the joint efforts of your office and HUD, we were able to announce last May the filing of a civil fraud complaint against Mortgage IT and Deutsche Bank. Today, we announce the next step in our ongoing effort to combat fraud and abuse in the mortgage industry. I'm especially proud to be here today as this case clearly illustrates HUD's successful collaboration with DOJ in identifying fraud in the FHA mortgage insurance program, protecting the FHA insurance fund, and ensuring the integrity of the mortgage industry by bringing offenders to justice and deterring future fraud. Mortgage fraud causes devastating losses to individuals, to businesses, to communities, and to our government. HUD experiences these financial losses directly because HUD's Federal Housing Administration pays insurance claims for defaulted mortgage loans. We see the destruction that defaults from mortgage loans that should never have been made and what they do to our communities across the nation. HUD's Neighborhood Stabilization Program helps to ameliorate some of this harm to communities. We see the devastation in the lives of families and their children in our counseling programs, and in the worst case, in our homelessness programs. Mortgage fraud has very real human victims. In addition to the action being brought by the U.S. Attorney's Office, I'm pleased to announce that yesterday HUD took independent action to suspend immediately the FHA approval of Allied Home Mortgage Corporation. Today, the Government National Mortgage Association, Ginnie Mae, a corporation within HUD, also took action to protect itself from Allied Home Mortgage by issuing a letter of default and seizing its custodial accounts. In addition, HUD is immediately suspending and proposing the debarment of Jim Hodge from participation in all government programs. HUD is also proposing the debarment of Allied's Executive Vice President, Gene Stell, from participation in all programs government-wide. As a result of the Department's actions, we've taken steps to prevent Allied and its two principal officers from continuing to defraud and mislead the Department. As of today, Allied may no longer originate FHA-insured loans, nor can Jim Hodge participate in HUD programs in any manner. This administration has been especially aggressive in prosecuting mortgage fraud. At HUD, Secretary Donovan has made mortgage fraud enforcement a top priority and has given me a broad mandate to sanction lenders who violate HUD's requirements and to prosecute lenders who cause losses to the FHA fund. This case, like the case against Mortgage IT and Deutsche Bank, is one of the many that HUD has prosecuted or referred to the Justice Department for prosecution. Through cases like the one we announced today, we reiterate HUD's expectation that FHA lenders will only fund prudent loans and that they accept the responsibilities incumbent on those businesses that benefit from their participation in our federal insurance program. The vast majority of our FHA lenders applaud HUD's commitment to root out fraud wherever we find it within our programs, and I know they stand with us today. We look forward to working with the United States Attorney's Office to bring this case to a successful resolution. Thank you.